Ali, have you been encouraged that we didn't see more of a pronounced spike in yields and with it a pullback in stocks following the Fed minutes yesterday, coming so soon after that inflation data last week?
Yeah, look, I couldn't sum up what the market and what May has been like better than the two data points that you just pointed out, right? The two things that the market has been looking at and super focused on, especially during earnings season, as the CEOs have all told us that the labor market is tight and input costs are rising, are inflation and jobs. And in the last number of weeks, we have gotten surprisingly confusing and sort of narrative shifting information on both of those. So to have that followed by tax day, so probably a lot of retail selling both in cryptocurrency and in NASDAQ-like stocks, and then the movement down in crypto, yesterday felt terribly, terribly heavy, and retail was not there to pick it up. So I think we're going to continue to see what we saw today with this growth value seesaw, which really has very much to do with that same tug of war you just mentioned in terms of is this game of chicken between the Fed and yields going to materialize? Who's going to be right? Who's going to be wrong? And I expect that for this phase of the recovery, which is more data dependent, more confusing, more specific to different industries and geographies, that you're going to continue to see volatility.
So what do you recommend your clients do, Ali? Because we just don't have a clear economic picture. We don't know who's right yet about inflation and whether this is going to be a more lasting, potentially dangerous phenomenon. So we're just going to have to wait, and it's going to be data point by data point. So in the meantime, what do you do?
Well, I mean, my first answer to that is a sort of tongue-in-cheek and easy answer. Well, that's why you're diversified. You invest across all assets, geographies, capitalization structures. But there are some things you can do. The first is that you can have as many uncorrelated assets as possible. You can invest thematically. So think about long-term themes, 5G, infrastructure build, et cetera. And look, if you have been invested over the last 18 months, let's say, certain parts of your portfolio have appreciated much more than others. And so you have to rebalance back. I'm with everybody on this program that has said, just because you're going to have a daily push and pull of value versus growth, the reopening trade is very, very real. If you walked around today in New York City, you can see, feel, touch, and smell it. And I want to be long that trade.
Shepard Smith here. Thanks for watching CNBC on YouTube.